The New E, The New Attitude, brought to you by Mercedes-Benz. Finance Minister Tengku Datuk Seri Zafrul Abdul Aziz says it may not be the right time to reintroduce a consumption tax like the previous GST. Zafrul said during a press conference earlier today that the government has its sights set on reviving the economy, and new or additional taxes could have an impact on the momentum needed to revitalise Malaysia's economy amid the COVID-19 pandemic. The government is looking at ways to enhance revenue as well as measures to plug the gaps or leakages. On whether foreign borrowings are being considered, he said there are no plans for that at the moment, as there is still ample liquidity in the local ringgit market. He also said that there are no plans to reduce the corporate tax rates from the current 24%. On Malaysia's fiscal deficit, Zafrul said it will take a while before the level returns to 3% to 4% of GDP, noting Putrajaya's official 6.5% to 7% forecast for 2021. As for Malaysia's debt to GDP ratio, he says the figure will likely exceed the 60% statutory limit by year-end. He will propose to raise the statutory debt limit to 65% in Parliament next week. IGB Commercial REIT has fixed 71 sen as the price for the institutional portion of its initial public offering, notably lower than the indicative price of 83 sen apiece set for its book building exercise. According to IGB's board's filing, the institutional price was set after the book building process was completed yesterday. IGB Commercial REIT units were also offered to IGB's shareholders via a restricted offer for sale or ROFS. They were entitled to subscribe to 2 ROFS units at RM1 each for every 5 shares held. In addition, shareholders who subscribed to the ROFS were entitled to distribution in specie or DIS on the basis of 3 DIS units for every 2 ROFS units subscribed. In a nutshell, IGB shareholders will be paying RM2 for 5 units of IGB Commercial REIT or 40 sen each, which is at a nearly 44% discount over the institutional price of 71 sen. Still, the ROFS received a lukewarm response, as the REIT's manager received valid acceptances for 241.95 million ROFS units and 362.92 million corresponding DIS units, a subscription rate of 78.72%. Hong Leong Investment Bank, the principal advisor, said the unsubscribed ROFS and the corresponding DIS will be placed out to institutional and selected investors. The REIT's tentative listing date is September 20th. Datuk Mohamad Nizar Najib, the son of former Prime Minister Datuk Seri Najib Razak, has entered into a settlement with the Special Commissioners of Income Tax over his non-payment of 13.16 million ringgit in tax arrears. Nizar's lawyer Muhammad Farhan Muhammad Shafi told the edgemarkets.com today that a consent order was recorded last Thursday. He said the amount Nizar agreed to pay under the consent judgment is significantly less than the 13.16 million ringgit claimed by the Inland Revenue Board. The lawyer, however, declined to state the exact amount, insisting it cannot be made public under the settlement. Following the consent order, Muhammad Farhan said his client will be withdrawing the appeal filed at the Court of Appeal against the High Court decision to grant summary judgment in favour of the taxman over the 13.6 million ringgit in tax arrears. The Court of Appeal had fixed September 9th for the parties to update on the status of the appeal. PERODUA sold 6,988 vehicles last month, compared with just 655 units in July, as its manufacturing and sales arms gradually resumed their operations after the nationwide lockdown was lifted on August 16th. In a statement today, PERODUA President and CEO Datuk Zainal Abidin Ahmad said the company will see the production and registration numbers multiply in September as the situation normalizes. Year to date, PERODUA sold 104,933 vehicles, a 12.5% drop from 119,977 units between January and August last year. Zainal said PERODUA is working on closing this gap by further increasing its manufacturing output while improving the standard operating procedures to ensure the safety of its workers and customers. Based on the time and resources available, he said the automaker is lowering its sales target by 10.8% to 214,000 units this year from its initial target of 240,000. On the semiconductor chip shortage, Zainal said PERODUA was able to secure enough to ensure production would resume smoothly and that most outstanding orders would be met within the year. After a 2-week rally, shares of Can1 hit a high of 4 ringgit 10 sen, the highest they have been in 5 years amid active trade this morning. The last time its share price stood at this level was in May 2016, after declining from its record high of 4 ringgit 90 sen 4 months earlier. The stock, which closed at 3 ringgit 65 yesterday, pared gains to settle at 3 ringgit 84 at the close. While the reason for the share price rally is unclear, Can1, which manufactures cans and bag-in-boxes and packages and distributes dairy and non-dairy products, has posted improved quarterly earnings this year. For the second quarter of FY21, it posted a net profit of 48.83 million ringgit against a net loss of 26.48 million ringgit in the previous year. Revenue rose by 19.4% year-on-year to 678.83 million ringgit. In its bourse filing, the company said the improvement was mainly due to better performance in its general packaging division and lower interest expenses offset against other operational expenses. This program was brought to you by Mercedes-Benz.